It's LeAnn Riley here, and we're here today to learn how to structure your real estate business. Do you need an LLC or an S Corp, and how does a partnership work? We're going to find out all that today from our guest, Jaren Johnson, who is an attorney here in Minnesota. So first, I want to show you a couple of things here and just let you know, today we're here. Welcome to LeAnn Riley's Real Estate Investing Made Simple Club. And we do live interviews with experts and leaders in the real estate investing world. And I'm LeAnn Riley, broker and real estate coach, and I lead the Encore investment team of realtors here in the Twin Cities, Minnesota. I built a multi-million-dollar portfolio in residential, multifamily, condo development, commercial, and vacation properties. And as a national coach, I help people get started or scale a portfolio without confusion or fear with my proven profit formula group coaching program. So also check out my YouTube channel. It's called LeAnn Riley Real Estate, and you'll find this interview and other interviews of experts over there. And while you're there, be sure and subscribe. And remember to stay on today after the presentation, because we do networking. And I just want you to know, networking is how you get yourself further faster in the real estate investing business. And you get to meet other investors and introduce yourself. So again, today's topic, how to structure your real estate biz. And I always get asked this all the time. Should I have an LLC first? Well, every single week somebody asks that, and we need an answer and a resource. And that's why today's guest is Jaren Johnson. So let me introduce him real quick. Jaren Johnson is an attorney, Minnesota State Bar Association real property law specialist, and the founding member of Johnson Law Office. He specializes in real estate, business law, estate planning, and asset protection. And he operates a company with his family that develops raw land and rehabs existing properties. And he also is a give back kind of guy. He contributes his time to SCORE, and he's a member and past president of the Riverton Community Housing Board of Directors. And they oversee the operation of hundreds of affordable co-op rental housing units near the University of Minnesota. So today, let's welcome Jaren. And first, again, I want to share, I met him networking, and that is the secret to building a good portfolio and prosperity in real estate, is networking and relationships. So let's start out with Jaren, and he'll be here. Let's have Jaron start. He's doing a PowerPoint presentation to show us the differences between an LLC and S Corp and all that. So stick with us and you'll learn a lot and be better prepared to have the right structure for your real estate investment portfolio. Hey, Jaron. Hi. I know I missed a little clip here on the beginning, but let's jump into your PowerPoint.
I actually got that flip from a realtor buddy of mine who knew the family, who didn't want to list it. And so I bought it off market. We negotiated the price, and I bought it almost sight unseen. So buying those things off market, having connections is really big. I'm a kind of onesie twosie flipper. I do it as a hobby. The investment side, the rentals is more the side where we're coming from. But so what I've been doing lately is getting more towards more land development, more multifamily stuff. I manage my family's investments. So I do they probably have, I don't know, 400 or 500 units and about 500,000 square feet of commercial. So that keeps me pretty busy on that end. But so that's kind of what I've been doing, just kind of trying to read the tea leaves of which way the market's going these days, and find which way to go.
There's something really interesting that you just said, is your you're finding these off-market deals, but you're buying them almost sight unseen. And, that's kind of how it's going these days. It's scary if you don't have any experience, but if you have some experience, it's not nearly as scary or risky.
Right. Yep.
Yeah. And
and we'll talk about this later, but you've got to be educated. So you got to be able to go in and see whether the foundation is step cracked, whether the roof's sagging, the big ticket items.
Right.
She might just do a quick walkthrough and just go, yeah. Okay, it needs 50 grand. But make sure the big ticket stuff that, a new foundation is 30, 40 grand. So it's like that can kill your deal if you do a sight unseen type of deal.
So when you said you're managing this portfolio, but a lot of it's commercial, right?
Yeah, correct.
Yeah, but you're still buying multifamily.
Buying and building, yeah, yes.
And building, okay. And building around here?
It's in the suburbs, but mostly in Sioux Falls area.
Oh,
my family's in South Dakota.
And that's the other thing. You have to invest in real estate where the numbers work. And it might not be in your backyard. And
Correct.
Smart investors, they know enough to do that when the time's right.
That's right.
Yeah, so that's cool. So we already pre-qualified Jaron here, and he already owns real estate and he's an attorney, right? So, okay, now a couple logistics. I always take a poll right here. We just want to see who's listening, who's here. So I'm going to throw it up. It's real quick. All I want to know is what type of real estate investing interests you. And it's a multiple choice. Just quick, make your vote. And that helps Jaron and I know who we're talking to. Okay, so we got, so far buy and holders are winning. I'm going to just give you another 20 seconds and we'll see who's all on here. There's some short-term rental people. Okay, I'm going to end the poll. Here we go. Oh, we got a couple last minute votes there. It's moving. All right, what do we got here? I'm going to share the results. It looks like the buy and holders are the winners here. Oh, we got some people scaling. And yet there's some beginners here, and that's always good for us to know. Okay, so I'll take the poll down. Here we go. Okay, now I'm going to get into the questions. And just so you know, we have a PowerPoint that we're going to put up because you know what? We're talking to a lawyer. We got all this legalese we have to talk about. So it's best if you folks can see what we're talking about, okay? So tell us like the story. How did you get into investing in real estate, Jaron? And like, were you already a lawyer or it came first?
Yeah, so I actually had to write this down because it's been a while since I started. So my dad was a drywall contractor when I was young, growing up. Got into real estate investing and real estate development when I was in my teens. So I used to sweep out when he would hang sheetrock, I would sweep out houses. I'd help frame, I'd help do everything as a kid. So I learned all the construction stuff, helped him with his flip. So that was early 80s, mid 80s. Dating myself a little bit.
Up with it. You grew up with it around the dinner table.
Yep. And so I got into it early. In 98, I went in, in 88, my roommate at Gustavus in college bought a rental that we both lived in. And then the next year I bought my own rental down there. So I was 20, 1989, I believe it was. It was a fourplex. I rented it out at $100 a room to students, which back then was, I guess, the going rate. And I made a ton of money. And so I paid off the loan within a few years. I kept the property. I sold it just before the tornado hit St. Peter in 98 and tore the house down. So that was a good investment. And then I've been buying properties ever since. It's great when tenants basically pay for your property. So the buy and hold's great if you can deal with the tenant issue. As I've gotten older, I've become a little less willing to take tenant abuse. So I do more fix and flips, more development, more commercial stuff. So lately, and I got into real estate. So I was a tennis pro for a while on the East Coast. I moved to California, didn't like San Francisco, moved back to South Dakota and worked for my dad and my uncle, seeing as a real estate broker. And so seeing how much they use real estate lawyers, I went back to law school at that time. And so that's where I got my start. So, so I took a few years off to college, went and toured the country for a while. So then I've been doing that ever since. And so I'm certified, as you said, as a real estate expert in the state of Minnesota. There's about 400 lawyers out of 25,000 in Minnesota that are certified as experts in real estate. So it's a very small group. Basically says I know more about real estate than the other 24,600. So that's one thing. And then I was named as a rising star and a super lawyer by the Minnesota Law and Politics. So another feather in the cap, so to speak. But yeah, so I've been involved in real estate since I was a kid. Enjoy it. It's fun. It's very unique. It's never the same. There's no two deals that are ever alike. So that
I love that you have a real estate broker background. Like you have the construction background from way back, then you have the selling and the buying, and then noticing the whole that, real estate attorneys are hard to find. They really are, that can understand the complexities of whatever it is you're doing, be it development or whatever. And then realizing that and finding that as your field. And I'm sure your dad and uncle needed an in-house lawyer, right?
Yep, they still do. They call me up all the time.
Oh, I bet they do. And, when you say commercial real estate, just so the folks know, anything over 5 units is considered commercial in multifamily. But are you into office or retail or what?
Yeah, so a little bit of multifamily over 5 units. So in the 20 to 60 unit range is kind of the stuff we're finding. And then on the commercial side, it's a commercial office tenant, like a manufacturing tenant. So like in Sioux Falls, I think that one's 70,000 square feet is what the one building is. They develop balloons. So it's that type of property. But yeah, it keeps it. And then we have a bunch of land that we're getting ready to develop. So we've been sitting on that for years, but now it's right.
No, it's right. Yeah. That's the thing about land, and people maybe don't realize that land is a long play. It's not a short, I'll get this land and I'll, like a fix and flip is a short play.
Yep.
And land is a long play, but when the time comes and you can really cash in.
Yep, that's right. Yep. And we talked about one of my office mates is a senior condo developer. And so he can't buy enough 3-acre parcels, and we can find them.
Oh, I bet.
And we put the properties up in 6-8 months, and they're almost pre-sold. So yeah, those are the developers out there are really killing it right now.
They are, if they can only get the products, right?
Right.
Yeah. Okay, so let's move to your educational, portion. And folks, what you can do is, as he's going along, you can put it in the chat if you have a specific question, and I'll watch that. And then maybe I'll ask him the question. Okay, but he's gonna just teach us, what the heck, LLC, S Corp? Let's see what he says.
Hold on, let me see if I can share this. It's not giving me the ability.
Okay, let me try. I can share it because I have it also. So let me share it. Here we go. Can you see it?
Yep, there we go.
Okay, so I'll be your page turner.
Okay, sorry. I don't know why mine won't share. Okay, so this is
maybe I will. There you go.
Okay. So as we talked about, I'm an attorney. I've been practicing since '99. I have my own firm in Edina. I was with a big firm in downtown Minneapolis for several years. Nothing wrong with that. It's just driving downtown from the south suburbs is kind of a waste of time. So I slowly kept moving towards the outer ring suburbs and closer to home, and now I have my own practice. But as I said, I'm a certified real property specialist by the state bar. I got that in 2005. I own multiple businesses. I own my law firm. I own a part of a junior hockey team. I own a helmet liner part of a helmet liner company. And then one of my golf buddies and I, we buy other businesses on the side. So it's kind of a serial entrepreneur thing. And then, as we said, I'm also a real estate investor. So I buy and sell properties, develop properties, and that type of thing. So next.
Okay. Oh, we got to have this one.
You couldn't have a legal presentation without this. Some of the stuff you're going to hear is most of it's legal in nature. Do not employ it without talking to a consultant, an attorney, an advisor, a CPA, whomever. This stuff is general in nature and not necessarily ready to go out of the box. So,
Okay.
all right. So what are we trying to protect? So we talked about, or kind of the gist of the presentation, or the webinar today, or the seminar, is how to form your real estate business correctly. And so what does that mean? And so what you're really trying to do is to protect your personal assets. And so that you do that by using an entity, either a LLC, S Corp, C Corp, any other type of entity vehicle. You need to form that entity correctly, and we'll go through that later on in the presentation. And you need to capitalize it and operate the entity correctly. Once you've got the entity formed and it's operating correctly, your personal assets should be protected. That being said, now we need to shift to the second part, which is operating the business correctly, because even though your personal assets may be protected, you could thereafter mess up, and the business assets that you put in are now subject to risk. And so to protect those business assets, you need to operate the entity correctly, which we'll talk about. You need to make sure your contracts with contractors, suppliers, employees, vendors, tenants are all legally correct and utilized. A lot of times we see people don't even use them at all. And then another option to protect your business assets is to diversify your risk by using, obviously, insurance, by using multiple entities, and that type of thing.
Okay.
Oh, this is one of those drop slides. I didn't know I had this. All right, so there's numerous entities that you can use in your real estate business. So the easiest one, the default one, is the sole proprietor. So if I go out and hang my shingle and say, I'm Jaren Johnson, I'm in business as a real estate investor, I'm a sole proprietor. If I do absolutely nothing else, that's what I am. The next one is a partnership. So it's basically a sole proprietor times two or more. So anytime two or more people enter into any kind of a business venture, they are a partnership by default. And that's without any formality or any legal documents that are over the partnership. The S corporation, so that is a creature of statute that is formed by filing articles of incorporation with the Secretary of State and numerous other things. But that has shareholders, as you might imagine, or may have heard of. It's basically a C corporation, but you elect to be treated as a pass-through entity, so that's why it's an S election with the IRS. The C corporation is the default corporation. If you file articles of incorporation, you are by default a C corporation. You need to thereafter file the S election. The C corporation, and we'll get into this more later, but it's taxed twice. So it's taxed at the entity level, and then it's taxed again when the dividends are distributed to its shareholders. The limited liability company is a newer creature of statute. It was formed first in the 70s in Wyoming. Every state now has an LLC Act. It's available in every state. There's varying degrees of it. It's basically a partnership structure with a corporation shell over it. So if that makes sense. So all the structure is treated like a partnership, but it's got liability protection similar to a corporation. The limited liability partnership is basically a partnership that files a limited liability election with the Secretary of State. It's a little more complex, there's more filing involved, not used that often, but I'm kind of giving you the full range of what's available out there. The limited partnership is one where you have two different types of partnerships. So you have a general partner and a limited partner. You see these in bigger real estate deals. These are used quite a bit in syndications and in bigger ones where you've got an institutional investor like a Citibank or something like that. We did a deal in Sioux Falls where we were the general partner at 1%. I think that's what it was. And Citibank was the 99% limited partner. They put up all the money. And the reason you use those is the limited partners, its risk is limited to the investment it puts in. Finally, business trusts are something that are used a little more often these days. They're still not that prevalent. You do it. A lot of folks use it for anonymity. It's not with the availability of the other options. You don't see it as much, but it is an option to use. All right. So the comparison. So like we talked about, sole proprietor. You're by default, that's what you are. If you do nothing else and you hang your shingle as a real estate investor, you're going to be a sole proprietor. There's zero cost. You have to file anywhere. You don't have to form anything. Anyone can own it, whether a U.S. citizen or foreign. Only need one owner. Typically only one owner, because if you have two, it's going to be a partnership typically. It goes for the life of the owner. It has unlimited liability. What that means is that everything that sole proprietor does in its business has liability to the sole proprietor's personal assets. And the capital structure is just the single owner. The partnership, typically, it's an agreement. It's either a handshake, if nothing else, a nod, a wink, where two people agree to go into business together, two or more. It is governed by the Uniform Partnership Act, but there is no cost to get involved. The better partnerships and the more structured ones will have formal documents drafted, but it's not required. And again, anyone can own, U.S. or foreign citizens. A number of owners is two or more. The partnership will dissolve if there's two partners upon the death of one of them. It won't dissolve, it'll become a sole proprietor. Liability in this one is problematic because it's ×2. So everything my partner does, I'm liable for. So be very careful if you go into a real estate venture on a bare partnership with another person, because if they do something wrong, you're on the hook for it.
Wow, that's interesting. And I tell people, you better want to be married to whoever you're partnering with. Just get it. And you better have a buy-sell agreement and who's doing what agreement.
Yep. And even and this is true in LLCs and S Corps as well, but have an agreement where it's like one partner is the partner in charge. One partner, I mean, because if it's just two of you and you have a 50-50 deadlock, your business is done. You're never going to move forward. And there's almost no legal recourse except going into a court and saying, Judge, I just want you to dissolve it. And that will take you the better part of 8 months. So by that time, your real estate deal is gone. Moving on to the more structured entity availability. So you got your LLC and LLP. So the LLC, you file articles of organization with the Minnesota Secretary of State. You can file them in other states. Some people will file them in Wyoming, South Dakota, Alaska, because of the anonymity that's involved in those states. I don't know what their filing fees are. They're similar. Florida is $200, I believe. Every state has annual renewal fees that are involved. So before you employ that kind of strategy, talk to an attorney or a CPA, because it's not always wise to file in a foreign state. And a foreign state means any state outside Minnesota, and then bring the business to Minnesota. But Minnesota, it's $155 is the only fee that the state charges. Anyone can own an LLC, U.S. citizen or foreign. Number of owners, at least in Minnesota, every state's a little different, but you can have a single member LLC in Minnesota. It has all the protections of the LLC with multiple members. The duration is presumed to be indefinite unless you specify that it's only for a certain period. I do sometimes specify, so for single purpose, one-off, single transaction entities where we're going to buy a property and we're going to fix it and sell it, and then we're going to go our separate ways. We will put that the entity dissolves after 2 years or 3 years, whatever the case may be. The liability is limited, so members aren't liable for the LLC's debts and obligations and contracts. So that's why
everybody wants to do it right there. The real estate investor who's buying his first property, he wants that because he doesn't want that liability, right?
Yep. So if like, for example, if you buy and fix a property and you put a tenant in, for those that are buying and holding, and that tenant slips and falls and cracks her head open and has a $10 million claim, the claim is against the LLC, not you, not the owner of the entity. It's not against the officers. It's not against the board of governors. It's against nobody in the LLC, assuming they didn't do anything independently wrong that would void that liability shield. The liability starts and stops with the LLC. The capital structure is any, again, you can have any type of membership. So typically you can separate, not typically, you can separate financial units and governance units in an LLC, which allows the financial unit holders to share in the profits and the governance units holders to share in the governance and direction of how the LLC is operating. I do that sometimes when you've got a silent investment partner that doesn't want to have any control, just wants the money. So you give them more financial units and no governance units. So that's the capital structure of an LLC. S Corp, so unlike LLCs, you file articles of incorporation versus articles of organization. Same filing fee with the Secretary of State, but a little different document. The one difference is an S Corp, it has to be a natural person and a US citizen. Certain trusts can own S Corps, but it's limited. So it's much more restricted on who can own an S Corp. There's a limit of 100 owners in any S Corp. And the IRS is on to it being cute where you have multiple entities with multiple groups. They'll try and group it in. So you can't really get around this limit. As with the LLC, the S Corp, the duration of the entity is indefinite. It goes forever unless you specify otherwise. Like the LLC, it's limited to your investment. So if I put in $100 into an S Corp and the S Corp gets sued, the only thing that I have at risk is my $100 because the S Corp owns it. I have no personal liability for the debts and obligations of the S Corp. And S Corp is more structured in how the shares are classified. It's only one class, but you can have voting and non-voting shares. And finally, the C Corp, which almost nobody uses because it's very complex. It has double taxation. It does have certain benefits. So if you want to have a medical expense reimbursement plan, the C Corp is the best way to go. If you want to retain earnings, that type of thing. But again, it's 155. And remember what I said before, if you file those articles of incorporation and you do nothing else, it will be a C Corp. So you need to be really very careful that you file that S election within, I think it's 90 days after forming it. Anyone can own a C Corp. So C Corp are typically your IBMs, your Coca-Colas, Amazon, all the big companies that you see traded on the stock exchange, that's a C Corp more likely than not. So anyone can own that, US citizen, foreign, any number of owners, has to be at least one, obviously, again, indefinite duration. As a shareholder though, I'm limited to whatever I purchased my stock for. So I have no personal liability for the debts and obligations of the C Corp. And then capital structure can be any. So you've seen common shares, preferred shares, pref stock. The sky's the limit on how they can structure the capital ownership of a C Corp.
Okay, woo, that's a lot to know.
I'm trying to watch the time. We got a lot of slides to go through here. So, as we kind of went through, so on the owner liability issue, so sole proprietor is unlimited. There are some assets that will be exempt. So anything that would be exempt in bankruptcy, so an IRA or 401k is not subject to a creditor attack, even if it's individual sole owner. Your car's value up to $3,500 of equity, $330,000 in the value of your home. So there's a whole list of bankruptcy exceptions that would also not be attachable in a lawsuit against a sole proprietor. C Corp, limited to your investment. Whatever you buy your stock for, that's the max that anyone can ever get out of you for the liability of the C Corp. Same with the S Corp, same with the LLC. The LLP has a little bit of a different twist because if you don't do those annual filings, because remember, an LLP is just a partnership that files a limit to liability request. And so if you don't file that annual recording, the state deems it to be a partnership. And so now you're back to basically unlimited liability. Limited partnerships, the general is on the hook for the liability. The limited partner has no liability except for its investment. However, there is a little carve out in the statute that says that if a limited partner engages in management of the business or management of the property, becomes an active participant, it's no longer deemed a limited partner. And so we actually got into this with Citibank because, as you might imagine, Citibank's a multi-billion-dollar company and they think they know best. So they tried to run this project and we politely sent them the IRS notice that said, you engage in this anymore and we'll send this to the IRS and you'll no longer have limited liability status. So general partnership, it's like a sole proprietor times two. You have all the liability of yourself and your partner. And then finally, self-settled business trust, they're unlimited. I mean, there's no liability to the person granting it except for the property that's in there. in the last 10 years. So but again, it's a not widely used vehicle. And so there's not a ton of information on it.
This is great because this is the reason real estate investors are concerned about who's liable, and you need to talk to somebody who understands this so they can give you the right direction. Because when everybody asks me the question as a realtor, and I say, you better check with your attorney because it's different for your tax consequences and your asset protection, and you got to get that all figured out.
Well, and I'll give you an example. So the other day I got a call from a referral, and they were looking to rent out a room in their house, thinking Airbnb, that type of thing. Heard she should probably do an LLC, put the property LLC. So we talked it through. And so in that case, your issues are, and you don't have to form an LLC. About 90% of your liability exposure can be covered by contracts and insurance.
Yes.
That being said, the LLC is relatively inexpensive. It's there. It gives you a 100% shield against liability as long as you do nothing wrong. But in that case, it's something to talk through with your accountant or your attorney or an advisor, a mentor. Do I even need one? Because she lived in the house. And so if she put it in an LLC, she would lose her homestead tax exemption, which, if she's not making that much money on the Airbnb rentals, then it's probably a push on doing it. And so if there's different circumstances on when you might not need one, they're not that prevalent, but there are ones where you may not need an LLC and want to go a different route. So,
and you know what? I bet that lady was glad she called you, because then she could make a proper decision that worked for her.
And not all accountants know this. Accountants know a little bit, but unless you get, they're actually real estate accountants. If you're looking for an accountant, try and find one that has real estate experience or practices in real estate law with real estate investors. They're a little different breed because they kind of see what you're doing and what's coming down the pike and help you structure your investment and your business in an appropriate way. So what does it take to form these and operate these various entities? So like we said, sole proprietor is nothing. You hang your shingle, you say, I'm in business, I'm a mouse salesman. You're in business, you formed it. There's no tax. Everything that you make goes right to your 1040, your personal tax return. You have no fiduciary duties because there's nobody else. Fiduciary duty, for those of you who don't know, is an obligation to act in the best interest of somebody else. And so as we go through, that'll be what the fiduciary duty generally means.
Well, that's like us realtors. We have fiduciary duties to our clients.
Yep. Various professions have. So lawyers, realtors, accountants, financial planners, they're all by statute, by rule, by law, in some way, shape, or form, case law sometimes, even common law, they owe a fiduciary duty to my client. So I have to act in that client's best interest. I can't act in my best interest. So that's what we mean when we say fiduciary duty going through here. There's no allocation of profits and losses. It all goes to that sole proprietor's 1040, and there's no registration. Partnership, there's nearly none. Like we said, two people shake hands, wink and a nod, that's a partnership. Again, you can make it more formal with a partnership document, and you should. There's no entity tax level at the partnership level. Each partner does owe each other a fiduciary duty. And so that's why the partnership agreement really comes into play. And I draft them intentionally to say each partner owes each other a fiduciary duty with respect to this business. They owe each other no fiduciary duty for any other business, and they may engage in any other business. Without that verbiage, there's a chance that other partner might say, hey, you didn't bring me in on that other deal. We're partners. I should get a piece of it. So don't do blind partnerships ever. They're not good. At least do a joint venture, something where you put something in writing. Allocation of profits is per capita. So if there's two partners, 50-50, three, it's 33%. It's just straight per person. And there's no registration because you file nothing. The LLC is where you start to get into the formation and operating requirements. So formalities and more, you have to actually file articles of organization with the Secretary of State. You've got to take a physical document and file it with a state agency. There is no entity level tax. And what that means is that if the LLC, and there's only two members, makes $100,000 net for the year, each partner gets $50,000. There is no the LLC does not pay tax. There's no entity level tax. Fiduciary duties, they officers and governors do owe each other fiduciary duties. The members do not owe each other fiduciary duties. So they can be as cutthroat as they want. And we talk about the LLC and the S Corp. LLCs have members, S Corp have shareholders. As far as allocation of profits and losses, it's typically per capita, but you can, if there's 3 people, you can have one be a 40% owner and the other 2, be minority interest holders. It's all about what your contribution and your agreement say as to who owns what. But if you do nothing else, it will be per capita. So if there's 3 owners, they're all 33%. And then you do have to file an annual registration with the Minnesota Secretary of State. It's free, it's online. It doesn't cost anything, but people miss it all the time. And it's due the December 31st of every year in the year after you form it. So if you form your LLC today, you won't have to register until December 31st of 23. But if you miss it, you can reinstate it. It costs $45. Just don't miss it. It's a pain in the butt and it's really easy to register. You will have to, in your first renewal, designate who the chief officer is. You don't have to do that when you first form it. You don't have to designate who the members are, but you will need to designate who the chief manager is and the executive office address. And that's one of the main reasons, almost the only reason, that people will form LLCs in Wyoming, South Dakota, Alaska, is that in those states, they don't have that extra additional registration requirement of disclosing who the owners and managers are. C Corp, again, with an LLC or an S Corp rather, file articles with the Secretary of State. There is no entity level tax. So that's why the LLC and the S Corp are the most prevalent, is because it's basically it's an individual tax issue, but yet a liability shield for any contracts or tort liabilities. There are fiduciary duties. Again, shareholders, not shareholders own each other, don't owe it to each other, but in a corporation, it's a board of directors. In an LLC, it's a board of governors. Directors owe each other fiduciary duties to act in the best interest of the company. Officers also each owe fiduciary duties to the members to act in the best interest of the company. Again, it's pro rata to the number of shares. So if I buy 100 shares and LeAnn buys 200 shares of the company, she owns 2/3, I own 1/3. So it's very simple math on who purchases what number of shares. Like the LLC, you have to renew it annually with the Secretary of State. It's simple. It's just done online. And if you miss it again, it's $45. The S Corp and the LLC are almost identical in formalities with the Secretary of State. C Corp is even much more. The documents tend to be very robust and more complicated.
Moving us along here,
Yep.
trying to keep pace. So
So one of the biggest, and I'm just going to kind of skip because we don't really deal with sole proprietors and partnerships all that much. If you have questions on it, certainly bring them up. But for the LLC and the S Corp, so LLC is what's called a garnishment shield. So if a member were to get sued, a member now, a judgment creditor couldn't get access to that member's membership interest because it's treated like a partnership, remember? And so the courts don't like it when somebody inserts themselves into a partnership. And so that's why it has a garnishment shield. To transfer ownership, you probably have to offer it to the other owners. That's why you have a membership control agreement or bylaws or an operating agreement. And then the capitalization is very important. In an S Corp, your shares of stock are actually personal property. So if a shareholder got a judgment against him, a judgment creditor could actually go into court and say, Judge, I want you to transfer those shares to me. And the court would do it. So that's one of the issues with using S Corp as a vehicle. Again, with transfer of ownership, you probably have to offer it to the other owners, but remember, you can't. So if you had 100 owners and you offered your shares to 2 other people, there'd not be 101 owners, and that would be prohibited. You also can't offer it to a non-US citizen. C Corp, there's almost no issues with that one. We don't use that one. So, all right. So the governing documents. So again, with an LLC, members own it. S Corp shareholders own it. We talked about this briefly. It's board of governors versus board of directors. Day-to-day oversight. I see a lot of confusion or misstatement on this. The managers of an LLC are typically a chief manager, a chief financial manager, a treasurer, secretary. In an S Corp, it's a president, CEO. CFO.
I
So
see that all the time
that happens
because
all the time. It's very
when I
annoying.
have to write real estate documents, I ask them what their title are and they, I don't know. And I'm like,
president, and you
you
can't be
gotta
a
figure
president.
it out.
I mean, you technically could be a president, but it's not how the statute's written. The governing document of how an LLC is operated is the operating agreement. In the S Corp, it's the bylaws. It's terminology, the way the statutes are written. Restrictions on sale, so a member control agreement, a buy-sell agreement will restrict how an LLC membership interest is transferred, and in an S Corp, it's a buy-sell agreement.
Yeah, and I want to stop on that buy-sell agreement because I have seen so many people who had failed partners or whatever, and they didn't have a good buy-sell agreement. And it can get ugly. They're trying to figure, if one dies, are you in business with their spouse? You have to discuss those things, and a buy-sell agreement covers them all.
Yep. So we talked about what it takes to initially form an LLC. The LLC is a typical vehicle that I see clients use and that I advise for passive real estate activity. So when you do a buy and hold property, that's a passive activity. You're not on the property every day. You're not out there, doing a day-to-day operation. So that's why it's called a passive activity, and that's why the LLC is the best form for this. So in addition to filing articles of organization with the Secretary of State, you need these other documents. And you'd be amazed how many people don't have anything more than the articles. So the written resolution of the organizer is what gets the company started. And then you need a first resolution of members, first resolution of governors that appoint the officers, because without that, you don't know who the officers are. Operating agreement, member control agreement, you don't need that for a single member, obviously, but for two members, it's very highly recommended. The subscription agreement tells the world or tells the company who owns what. Without that, how do you know who owns the membership interest? Obtaining your federal tax ID number, which you'll need someone's social security number to get. Not always, but sometimes I will get a state tax ID number. So if you have employees, if you're going to be selling goods where withholdings are required, you also need a Minnesota state tax ID number. And then finally, capitalization. You have to put money in the company. Without money in the company, it doesn't exist.
I told Jaron we needed to see this because so many people just, I'll go online and make my own, and they don't realize you need all these other pieces of paper.
Yep. And this is the initial formation. On an annual basis, you should do an annual meeting of the members and the governors where you ratify certain acts, or you reappoint the officers, you state what's going on, and then you file your annual renewal with the Secretary of State. So the S corporation, the reason we use these ones is typically in an active business. So for example, if you own property, say you own 5 properties, all in LLCs, separate LLCs would be ideal, but not necessary. You could then form an S corp management arm, which you would then be in a daily activity. So that would do that as an S corp, and you pull money off of those LLCs. And we'll get into the tax issues here in a minute, but that would be the difference of why you might use them. You can own property in an S corp, it's just not recommended. Here's a hybrid. So you can form an LLC and elect to be taxed as an S corp. So for example, my law firm is a PLLC, a professional limits liability company, and then I elect to be taxed as an S corp. So I get a W-2 and I get a dividend at the end, which you wouldn't get in an LLC normally.
Great. I mean, this is a way to work together on your formation and your taxation, right?
So if you don't form the company properly, if you don't operate it properly, in Minnesota, someone that has a claim against the LLC can do what's called pierce the corporate veil and get to the individual members and owners for the liability.
Yep, that's what we're trying to avoid.
And this is it's a case law. There's a 2-pronged factor. These are the things the court will analyze to see whether the company is called what's an alter ego of the person. And so the biggest one, and I've got it in bold at the bottom, is the absence of corporate records. If you don't have that, it's almost a slam dunk that you're going to get pierced by the court.
Oof. So yeah, you can think you have a great LLC, and when you're challenged, you better have your papers.
There's no certain number of factors. Like I said, it could be 1, it could be 2. The court might think 8 are needed. It's all depending upon what that court thinks. And so it's a very gray area. Simply don't mess around and do it properly and operate it properly. So we kind of talked about this. So S corps are active, formation similar. You can separate active and passive income, saves about I don't know, $10,000 to $15,000 up to $107,000 of income every year. Stock is personal property. Keep that in mind. That's why I do as an LLC and tax as an S corp. No garnishment shield in the S corp. And then remember, file the S election or you're treated as an S corp and double taxed. Let's see. So once your forms, we talked about this a little bit. So hold at least annual meetings of the members and governors and file the annual renewal with the Secretary of State. If you don't, the company technically doesn't exist anymore. And so all the contracts that you do will now be in your personal name. Observe formalities with contracts. We'll get that to you on the next slide. Don't commingle funds. So if you're going to, don't take the company checkbook and go to Cub Foods and buy your groceries. Take a draw from the company, then go buy your groceries. When you commingle funds like that, when you use the company checkbook for something that isn't company related, that's one factor that the court can use to pierce the corporate veil. LeAnn mentioned this. So when you see a contract, you feel free to revise it, to change it, to add to it. So on the left side, where it's just my name, I'm personally liable for whatever that contract is. I'm signing for me. On the right side, I'm signing for the company. I have no personal liability for ABC Company LLC. So if you see a signature block anywhere and it just has, like at the left, write in Jaren Johnson as chief manager of ABC Company LLC. If nothing else, write that in. Otherwise, you could be personally liable for the contracts that you're signing in just your name.
That's it. And I see it all the time. Yeah.
You'll see it with title companies. You'll see it on various contracts. They just simply don't, I don't know, they're not doing it maliciously. They just, it's not an issue for them. For marketing, you need to clearly identify that whatever you're selling or buying, they're doing business with an LLC and not you personally. If they think they're doing business with you personally, they can sue you personally. If a DBA is used, which isn't very common, make sure the entity is also listed. So it's ABC Company LLC doing business as the realty source, whatever your DBA is. Also keep in mind, for those of you that have real estate licenses, you're under increased obligations under Minnesota statutes to disclose. So those that have real estate licenses, you can't take advantage of other people that don't have them. So you need to disclose that, and you'll see that in listing agreements. It'll say the seller is also a licensed broker.
Absolutely. And I see it a lot on these off-market wholesale deals or whatever. You know, I'm a licensed realtor. That's the first thing I have to disclose. And then we'll figure out the terms and how we're going to do this.
Yep. So Minnesota nice, everyone knows that. I've been a violator of it. I've done handshake deals that I regretted. Put everything in writing, even if it's a one-page document, one paragraph, one napkin page, whatever the case is. And then don't deviate from it. If there's a change order, if there's some contract you're going to change, do an addendum. Just do it seems formal, it seems super legalistic, but I guarantee you'll be better off in the long run. As far as what you can and cannot include in a lease, I'll direct you to the Minnesota State Bar Association form. It's very comprehensive. It's almost too much. But if you don't have a lease or your lease is weak, at least start with that one. And then keep in mind, for those of you that have rentals, you've got new requirements coming down from Minneapolis and St. Paul, and I'm sure Hopkins and Minnetonka will follow about how much you can raise the rent. Mechanics things real quickly. If you do contracts with, have contracts with subcontractors and materialmen, just know that if you don't pay, they can put a lien on your property. And if they sue it out, the attorney can get attorney's fees, and those attorney's fees can be higher than the lien amount. So make sure you really are diligent with working with contractors and materialmen, and especially if you have a general, know who the subs are. Because a lot of times general will pay the subs, and then the subs will file a lien against your property in the same situation.
And your last one there says, don't pay the contractor unless you have the lien release.
Never, ever, ever give money without a partial or full lien release. And if they don't do it, don't pay them.
Yep. And then they'll do it.
Just quick odds and ends. So that we talked about, when you get a tax ID number for an S Corp and LLC, you'll have to use your social security number. What that means is that you're personally liable for any taxes that the LLC is obligated to pay that aren't paid. I include this slide because I got dinged for it. I had a business manager who wasn't withholding my employees' withholding taxes. IRS asked me to pay $90,000. So don't mess up on this one. It's huge. Friendly lien strategies, it's a little trick. If you buy a property and have a ton of equity in it, so say it's worth 200, you get it for 100, consider putting $100,000 second mortgage with one of your LLCs. It will make the property look invisible to creditors because it will look as though it has no equity. And then finally, big one, and I can't say this enough, network. I do this myself all the time. I speak at Mike Jackas stuff from Manria, and that's where I met LeAnn at one of those events and Pine Financials events. And so I continue to learn information when I go to these events, and if I'm learning it, everyone can. So I get deals that way. You learn tips and tricks that way. So highly recommend coming to these seminars, going to these events. I know it's time on your day, but man, it's a great way to learn stuff.
It sure is. Okay, now we're back for questions, folks. So who has questions, type them there in the chat box. But he gave us a thorough picture. And there's been so many times where you can't tell the difference. I really like your charts because now I can see them very clearly. So who's got a question? Go ahead and put it in there. Otherwise, I think you covered it all, and I asked questions while
we could talk about it for 2 or 3 hours. So it's
God, I know. You know, and for the person just getting started who says, hey, you know, do I need an LLC on this first property? What would be your answer?
So do the risk analysis. I mean, what are you going to flip it in 2 months? Probably not. You know, and if you're going to do most of the work yourself or only have 1 or 2 subs, you probably don't need to. If it's going to take longer, or if it's a multi-family property, if it's got a lot of moving parts, if it's got a lot of subs that you're going to have, it's got text, you know, if it's got issues, then probably use the LLC. It's also a thing is if you're going to do this as a profession, then form it anyway, and then just do every project in your LLC. So if you're doing a one-off.
We got a great question here from somebody that said, no, it got half cut off. Let's see here. Why is that? I think what he said was, how many properties can you put in one LLC or entity?
So
per LLC.
So the absolute best practice, the best standard, the best legal advice is to put every property in an LLC because every property is an island. That being said, after 2 or 3, it starts to become cumbersome because now you have 2 or 3 sets of documents. You have 3 checkbooks. You have 3 of everything. So what I recommend is that as you continue to grow, if you're doing a buy and hold strategy, is they all need to be in an LLC, at least one. So if you have 10 properties, at least they're all in one LLC. That keeps your personal assets out of play. But if you're going to get multiple ones, separate them into risk classes. So if you've got 3 properties in Brooklyn Park, put those ones in one LLC. If you've got 3 properties in St. Paul, put those into another LLC. So separate your risk classes, and then that way each one will still it'll still be separated from the other ones. And absolutely, if you've got commercial versus residential, separate those 2. Don't put those into the same LLC.
Okay, somebody's saying, do we have to pay self-employment tax with that LLC?
So the money that comes out as from the LLC is ordinary income. So you pay ordinary income tax on those distributions, which is the benefit of using the S Corp in one part of that taxation. But yeah, you pay all the normal taxes that as ordinary income would be on the LLC distributions. Okay,
somebody says, can you explain again about if you have a lot of equity? You said you have your original LLC and then you have a secondary.
Yep. So if you were to buy, like in my example was you find a property and it's worth 200 grand and you get it for 100 and you've got a loan, say you're using hard money or whatever, or you borrowed it from friends or it's your own money. So you're gonna have a mortgage on that first one for 100 for the acquisition, but then you form a separate LLC, call it whatever you want, Minnesota Financial LLC, and you give that LLC $100,000 mortgage and you record on the property. If a creditor were ever come to say to the LLC and say, what are your assets? You say, well, I have this $200,000 house with a $200,000 mortgage. Most plaintiffs' attorneys will walk away if there's not easy money to be had, versus if you say, I have a $200,000 property with only a $100,000 mortgage, now there's 100 grand of equity they can attack. So don't give an aggressive plaintiff's attorney any kind of a target to go after. And then
Yeah.
I would only do if there's a substantial amount of equity. If there's 20 or 30 grand, probably don't waste the time because you're gonna pay mortgage registration tax and you have to have attorney draft the mortgage and file it and that type of thing. But it is a good strategy if there's a bunch of equity in play.
Makes sense. And now the question is how to go from a hard money lender with property in some other name to an LLC. Well, when you're paying off the hard money lender, wouldn't that be when you're?
So it depends on which hard money lenders you use. So like Pine Financial will not lend unless you're in an LLC.
Yeah. Most of them won't.
Most of them won't because you've got the usury issues. So under 100 grand in Minnesota, you can't charge more than 8%. And there's an issue whether that applies to this type of deal, but they're not going to take the chance. So I know Pine, I think Hendry, I think most of them will only loan to an LLC. So when you pay off that, either when you sell, if it's a flip, or if you burr it, or what any other kind of buy and hold, you'll take that hard money lender out with permanent financing, and it's just all in the LLC.
Yep. Okay, let's see. Ideally, should active versus passive income be separated into separate businesses? Let's see the rest of that question. Separate business entities. For example, wholesaling activities and short-term rental versus buy and hold. Like put those in different LLCs.
Absolutely. So I think I kind of touched on that is like your buy and hold, your rental property, LLC. You're doing a management company, you're doing any kind of a contractor company, subcontractor, property maintenance, property management. Those are all good S Corp options. And what you do, the way you do that is you pull all the income up. So you have the S Corp management company charge the LLC property owning company a ridiculous amount of fees. And that way you pull all the money off of the LLC into the S Corp and you get your active and passive income.
See why you need a lawyer and a tax guy that really understand real estate to be able to craft this to the most advantage to you as the owner. It's complicated and, it's too hard to figure out on your own. And I loved your big chart with, it seems easy, go to the state and file this operating agreement. It seems easy, but there's more behind the curtain. Okay, I'm going to switch now. Remember, we're doing networking right after this, but first I want to close up the meeting here and tell you, let's see, got a couple things to offer and how to get in touch with Jaren here. So first off, you can do if you want to chat real estate, you can do a free strategy session. Oh, geez. There you go with me, and you go to LeAnnRiley.com, and then under the Realty Group tab, you can pick buy, sell, or invest. And then you get I'll do a Zoom meeting with you and we can chat real estate and help you move to the next level. And if you want to contact Jaren, this is his information. You can email him, you can call him, and you better write it down because you're going to need this if you're growing a real estate portfolio. Okay. And then also, I do have a Facebook community, Real Estate Investing Made Simple. And I do post current things like about the St. Paul 3%, rent. What do we call it? The 3%. Yeah. The thing is, there's some new changes that came out about that just last week. They're crashing it down and changing it. And those are the kind of things you'll see posted. So that's a good place to just go over to Facebook.